What's going on, guys? It's Henry back with another video, and in this video I want to talk about 3 different stocks that are penny stocks that I would be buying right now. Really interested in these. As you can see by my screen, I am 91% more Neanderthal DNA than other customers. So the first stock is going to be about 23andMe, ticker symbol ME. So I've been a customer for probably a few years now, maybe 3, 4, 5 years at this point, and I'm a really big fan because I think a lot of people are curious about their ancestry, their genetics, their health reports. And this company specifically is worth about $3 per share, and they have a big amount of data, a really, really big amount of data. And as you guys already know, the data today is like the oil of yesterday or 10 years ago, right? So data is exactly what companies need to prosper, to have a competitive advantage. And what I specifically like about 23andMe is that all of this data is very, very acquirable. Now, I don't know when 23andMe is going to be bought out, but it's probably going to be bought out at some point, or they're just going to capitalize and make money on their data. So taking a look at the market cap, it's a $1.3 billion company. And basically the 3 stocks that I'm going to talk about today, the 3 penny stocks, are all around this market cap. They're all around $3 to $5 or $6 per share. The first one being 23andMe, this was brought up to me by a Discord member. So one of my Discord members I was having a consultation with mentioned to me that he owns this stock. And I was like, interesting, I didn't even know that they had this stock actually. And then after looking at it, I really like not only the price, the value of this company and the industry that they're in, the sector that they're in. So anyways, let's go through some details why I like this stock. So if we take a look, first of all, at the chart, I'm going to go through some technical analysis first, and then I'm going to go through some fundamental analysis, and then I'm going to open up my Robinhood trading account. We're going to take a look at a potential play that I would do on 23andMe right now. So we're going to go 3 of these stocks, and we're going to do 3 different plays and analyze the technicals and fundamentals. So just sit down, buckle your seatbelt. You're going to learn a lot in this video, and make sure that you stick through because I'm going to talk a lot about really, really important things in this video. So first of all, taking a look at the chart, this used to be basically like a $7 stock. It used to be $7, now it's over 50% off. So right now it's exactly $3 per share, which is really cool because I have a feeling that the options are going to be amazing, because since it's at $3, I can sell at the money options. And we'll talk about that in just a moment. But as you can see here, there was a spike upward. This stock has some following. People are interested in this stock. So there's a lot of volume here. But since it has not really performed so well, and basically nothing's really performing that well right now in this market, and that's fine. We're going to get through these tough times and get into the good times. And, you know, markets and bear markets typically last 18 months. We're 10 months in. So maybe we have 8 more months of pain. I can't predict that. Nobody can. But when the good times come, we're going to grow our wealth pretty fast. And you have to be part of the bad times to be part of the good times. So I'm interested in owning this company because when the good times come, let's look at the 2-year chart. This could be a $10 stock, right? It could be. But even if it goes up to $6 or $5 per share, that's going to be really good, because my goal right now is just to beat inflation. I don't want to lose to inflation. Inflation's like 8%, but I really think it's higher than that. I think they're kind of lying to us, as they usually do on the news, you know what I mean? So I think inflation could be like 10 to 12%, and having a stock go from 3 to 5 is a really big deal. So anyways, that's a technical chart. Not that much here, right? It's just basically around its 52-week low, and probably even higher than that, or 104-week low, right? So really, really cheap price. Now, I do want to look at statistics. The statistics tab does tell me a lot. We don't have a price to earnings ratio. That is because we don't have any earnings on this company. They do have revenue, but they're not cash flow positive at the moment. So if you take a look at the leverage free cash flow, well, it's a negative $75 million. But again, many tech companies that are growing, unfortunately, they have negative earnings. That's not forever. They are going to become above water in terms of their cash flow at some point, right? We just don't know at what point, but it's going to happen. Now, taking a look at their total cash, it's almost $500 million, whereas their total debt is only $84 million. So this is a very healthy balance sheet. This is the most important thing, right? How much cash do you have and how much debt do you have? The company is full of cash. It's doing just fine, and it can go on for a very long, significant period. So I have no concerns over this company. And I think this company is very valuable because it actually has $1 of cash per share. $1, which means that it's $3. That means the absolute bottom would be $1 in theory. If this company had 0 revenue, 0 everything, no growth prospects, no data, it'd be worth $1. Most likely everything that it has in the revenue, let's go to the revenue tab. Let's go to financials, just take a look at that. They're making about $277 million, okay? So on the revenue tab, they're doing okay. They are growing, not as fast as I would like. Let's take a look at 305 to 271. So they're actually not growing. Looks like they're shrinking a little bit, which makes them a fantastic acquisition target for someone, because typically when a company is struggling, they're looking for buyers, and also buyers understand that this company would take a pretty good deal. So it could be a buyout of $3 billion, and this market cap I think was $1.1 billion. We'll take a look at that in a second, but you can have a double return, and that could happen in the next 12 months. So this could be a double potential, or they could just get their stuff together. They can increase marketing. One of the biggest downsides of actually all three of the companies that I'm going to talk about today, all three penny stocks, is all three of the companies I'm going to talk about today have basically needs for marketing. They have really big marketing needs. And that's the problem with small cap stocks. They're typically not, even if they're in an essential market, they typically have to educate the consumer, spend marketing dollars, which isn't easy because that bites into your, your profits basically. So let's take a look at the income statement. So 277, and they're basically bringing in negative amounts of money. So they're spending a ton of money on operating expenses. And then you can see here that, let's see, so selling and marketing is $111 million. So they're spending about half the money that they're making on marketing, 50%. So when they bring in $1, they're spending about 50 cents to acquire a customer, which again, I'm not surprised. That's going to be the case for many small cap companies that are trying to grow and put their brands out there. So anyways, looking at this company, what do I think will happen? Let's take a look at the options right now. I think this company is very strong. They have lots of data. Oh, by the way, I have a question for you. I'm not going to reveal this because it's personal data, but what do you think I am? Let me know in the comments. What do you think my ancestry is? Where am I from? My roots. But anyways, I just wanted to show you that I'm 91% more Neanderthal, which means that you shouldn't be listening to me at all because I'm a Neanderthal. I don't know anything. I'm just a guy on YouTube, so I'm not a financial advisor or anything. So if you're watching this channel, thank you. I guess you just follow me for some good insights, but yeah. Anyways, let me know what you think I am. I do my best here to be transparent as possible. Looks like I'm up a little bit today, but that's not what we are here for. We're here to take a look at me stock. So me, ME, 23andMe. Let's take a look at the options together and potentially what I would do right now. So because this is a $3 stock, let me go to trade ME options. Let me go to January 20 of 2023, which is very close, by the way. Happy almost New Year's. It's insane that we're in 2023. We all got to keep prospering and doing our best here. 2023 is around the corner. 2.5 strike price. I was hoping for a $3 strike price, but it looks like it's going from 4 to 2.5. So this expiration date won't be ideal. I could go for November 18. I think there could be yep, there is. Perfect. So what I would do right now is, if you like this stock, I'm a fan of it. I think what I'm going to do as soon as the market opens in about 20 minutes, I'm going to be selling some put options on me. Essentially, I'm saying that I want to buy this stock at $3. It's currently at $3.03 per share. So essentially what I'm going to do is I'm going to buy the stock at $3 and I'm going to get paid $25 to buy something for 300 bucks. So essentially my investment will be 275 bucks, which 25 bucks divided by 275 is almost like a 10% return. So I'm making about 10% of my money in about a month, which is a really good return, 10% in a month. So I'm getting paid 10% to buy this penny stock for a pretty cheap price. So I'm very excited about owning this company for a pretty good value. And I'm also excited to sell a put option and get put this stock potentially. Now, if I don't get put, that's fine. I still collect 10%. If I do get put, the 25 bucks here is still going to be mine, but now I have 100 shares of me stock, which is also fine with me. So again, making $25 and I'm risking 275, super small account friendly trade. Anyone with 300 bucks can make this trade right here and start understanding options and building a really good long-term skill. That's literally what option trading is. It's a skill that's not going to go away. As long as you know how to trade options, you can always make an income online. It can be location dependent when you get to the point where you're making enough to like live on it, quit your 9 to 5. I mean, that's basically what I do. I don't have to do anything. I have so much freedom because of option trading. But anyways, that's a separate thing. If you're interested in Discord, you know There's a link in the description. You can talk to myself or someone for free and basically discuss my Discord community and how my trades and everything else works. And we've just basically made a better package at the moment. So go ahead and check that out in the description. Totally up to you. You can also watch my free videos. I don't care if you buy anything. I'm just here because I love doing this. So not trying to sell you anything. Feel free to do anything you want. So selling a put on 23andMe is good. Now let's go to the second stock, which is going to be Hims and Hers. I love the third stock. I just want to mention all three, but let's go one at a time. Let's stick on one thing at a time, okay? So Hims is the next stock. I've been a fan of the stock. I've mentioned to my community in Discord to buy the stock at $4.47. That was a trade alert that I actually put out there. And since then, I haven't put any more buy alerts on this stock. I basically just held it, and the community has held it because I didn't want to buy it above $6. I don't think it was worth $6 at the time. But now I'm getting more bullish, especially with options, because you could probably already tell, or if you can predict the future, what do you think I'm going to do with this stock? If you get sell put, you're right. I'm going to probably sell a put option around $5 per share. We'll look at that in Robinhood. But first, I want to talk about what the company does. So let's take a look at the website and see what this company actually does. So Hims does a few different things: erectile dysfunction, hair loss, anxiety and depression, early climax, skincare. For example, let's go to erectile dysfunction because this is really interesting. And I think this actually affects a lot of men, actually young men, older men. It literally answers a few questions so we can help. No, I prefer just to look at the products. But anyways, look, you have to go through a survey. So 40% of men experience erectile dysfunction. What results are you looking for? So most people, and this is actually pretty cool because most people, either they experience erectile dysfunction or they're just looking to increase their libido. Either way, let's just go get out of here. I don't want to become an expert on, this is not my job to go through all of this stuff. But I have some experience here. I know that this is a problem facing a lot of younger men, older men, and the reason why Hims is such a good business is because young men and older men don't have to go to their provider and sit there in front of their doctor and say, I have erectile dysfunction, because it is kind of, maybe it's emasculating, maybe people are embarrassed, right? Not everyone wants to go talk about that. But with Hims, you can basically do everything online. You can get the blue pill, which is a Viagra. And the other one is Cialis. So there's Viagra and there's Cialis, and there's actually a couple other pills. I guess they're in their same drug category. And by the way, this is why I recommend most people don't invest in healthcare companies, because they just don't understand. And as you can kind of tell, I have experience in all of these areas within healthcare because I studied medicine for some time in college. I wanted to be a doctor before, but didn't end up coming to fruition. So what I like about erectile dysfunction, though, is not only is it easier for you to do it online, it's less embarrassing, it's faster, but also with erectile dysfunction medications, this company has a subscription recurring revenue. So it's not a one-time purchase. These people are, not that it's addicting, it might be addicting, but these people using these erectile dysfunction medications will see some benefit. They're going to like that benefit. They're going to be on these pills for a long-term period. So they're going to be ordering these pills probably on a monthly basis or on a regular basis, which means that there's consistent revenue for Hims as a company, right? The best businesses in the entire world have recurring customers, repeat business. With repeat business, you can get really rich. With a one-time sale, it's not as easy to get rich, right? So having repeat business is important. So erectile dysfunction is that. Hair loss is that, because Rogaine and the chemical behind Rogaine, you have to keep applying it for it to work. If you stop applying it, then it stops working. So in terms of hair loss, they're selling finasteride and other similar products to finasteride. So that's the active ingredient in most of the hair loss stuff for men. So finasteride is going to have to be applied on a long-term basis. Once you stop applying it, it stops working. So again, subscription revenue for Hims. And if I am a Hims stockholder, going back to the stock, around $1 billion in total market cap, that's good. And also, I like that they have good, consistent cash flow. So if I go to the financials right now, you will see that this is actually a very fast-growing company. They're actually growing extremely fast. So they are basically doubling revenue and then almost basically doubled again. Now, are they spending as much money as 23andMe? And the answer is they are spending about half their budget on marketing. So these two penny stocks and the third one, we'll see about the third one. But with Hims, they are spending again about half their budget on marketing. And that's because marketing is the most important function in any business. And especially for these smaller cap stocks, marketing is basically the secret. Because if you do think about it, one of the downsides of the stock is many companies can sell erectile dysfunction pills, right? It's Viagra and Cialis, and Hims doesn't have a special right to sell that. There's many online providers that can also sell, Cialis and Viagra. They can also sell finasteride. They can also sell the anxiety and depression Xanax, right? They can also sell these things. I don't know what early climax would be in terms of what they would sell there, but it's a simple, probably a cream, a pill, many things. Again, it's subscription, because if you're in a relationship and you have this problem of early climax, which I know for a fact many men have it. I don't know if it's the food, I don't know if it's the environment, I don't know if it's the mental health, but I know for a fact there's so much issues with a lot of this stuff, right? Erectile dysfunction, hair loss, America's more violent and collapsing and anxious than ever, right? And more financial problems, more mental health problems, more shootings, right? So this stuff is unfortunately very, very popular. Skincare as well, because of the high processed diet, right? So there's a lot of things that Hims is offering, which I really like, and that's why I'm going to be looking to sell puts into this stock again. Now, I do want to look at the statistics tab because I just want to make sure that cash on hand is pretty decent. And as you can see, they have $194 million worth of cash. Total debt is low. This is good. That means this company can keep spending marketing dollars because I know they're running ads. I've seen ads all the time. So anyways, let's take a look at Hims and let's see what I would do for trading options. So going to Hims, I'm going to go to trade Hims options. And again, I'm going to go out about 1 month to November 18th, which is 5 weeks from today. Going to go to sell put option. And then as you can see, the $5 strike is going for $35, which I know on the top of my head is about a 7% return. It's a little higher than 7%. I'm doing that because I know if I did 2 contracts, this would be about $70 on $1,000. So on $500, you can make $35 a month. Really good. If you have a small portfolio, boom, $35. Now you can go get some Chipotle or pay half an electric bill or internet, right? Maybe not all the way, right? Because $35 isn't enough. But if you do 23andMe and then Hims and then the third penny stock I'm going to talk about, if you still put on all 3 of them, boom, you got a utility bill, you got a cable bill or whatever, right? This kind of adds up, especially if you have a couple $1,000. Fantastic, right? You can grow a small portfolio even in tough times. These companies are really discounted. So if I go back to Hims and hers, and I look at the chart, you'll see that this stock is also depressed. No pun intended, because they sell depression medication. But this stock is depressed. It is down a lot. This stock was a $22 stock, which I hope nobody had it at $22 per share, This was a $22 per share stock, and I hope nobody had it at $22 per share. But I was recommending it here at around $4. Unfortunately, I was not smart enough to recommend it at $3.45. I didn't have the kahunas to do that. However, I was recommending it on the way up at $4.50, and it has done pretty well since that point. So now the third penny stock that I want to talk about is going to be Oatly. So the reason why I like Oatly is because this stock is also very depressed. It has been sold off like crazy. It's also at a 52-week low, above a $10 stock before. Very similar to the other 2 companies. And the reason why I like Oatly is because, I'm traveling. I travel a lot because I think there's a lot of issues in US. I have lower taxes and etc., right? And wherever I go, I keep seeing that coffee shops use Oatly. They use Oatly everywhere in the world. All over Eastern Europe, Western Europe, okay? Even parts of South America, right? I've been to Colombia and they also use Oatly. So what I really like about this stock is it's global and it's growing and its market share is increasing. It's really good for frothing cappuccinos, for example. So what froths better, which is really important for Starbucks because they want a good customer experience? Well, Oatly oat milk has a good froth factor. I just kind of made that up. But basically, it froths so much better, so customers have a better experience and they like Oatly more than soy milk or almond milk because those don't froth as well as Oatly does. Now, Oatly is a $1.5 billion company. It's not that big. It's a small cap stock, and it's also a penny stock at $2.5 per share. Now, if I go to statistics, this company has a price to sales of 2, very, very low. I haven't even seen a company this low for a while besides airlines. Apple, for example, is like 7. Tesla's like 12, okay? 2 is very cheap, and this stock also has a pretty good amount of revenue, $700 million, and they're growing at 21%, okay? Their cash is also above their debt. This is really important for me for smaller cap stocks because I want to make sure these businesses don't go out of business and bankrupt and you guys lose money. Instead, I'm looking at stocks that have cash on their balance sheet, therefore they can weather some of the bad times. If we're in a bear market for 8 more months, or the economy is bad for 12 more months, this company has cash on share over $100 million to get through this bad time. Now, if I go to financials, they're growing extremely fast, double, and then this was a 50% return, and they are growing at a consistent clip, which I really like. So again, I want to trade, and here's the website, by the way. Kind of interesting. Not necessarily my style. Looks like it's for the younger, like a younger crowd, but that's fine because look, maybe younger people are drinking lots of cappuccinos, right? Maybe younger people are wasting all their money on Starbucks. This company knows what they're doing because they spend a lot of money on ads and advertising. So again, you know, their ads and advertising is going to the right place because they're growing so fast. So that's fine. That's fine. They know their demographic. They have done market research. Of course, as a billion-dollar company, they're going to do their market research. So I looked at the website. I looked at the data, by the way, and oat milk is gaining market share against almond and soy. And gosh, I've even looked at macadamia milk. What type of milk do you guys drink? I mean, maybe you drink regular milk, but if you drink a substitute milk, like what do you think about Oatly and what do you think about oat milk? So anyways, I do have shares here at an average cost of $4. However, I have sold countless options, so my average price is around $2.90. I am still below water. I've still lost some money here, but I'm not as bad as it seems. And as you can tell, I have a total return of $90 on options. And actually, really simple. I don't even have to go into the options. You can just kind of look at what I'm doing. I'm selling $3 put options on Oatly for $12.16, but obviously that's an in-the-money put option. You can go for an out-of-the-money put option. You can go sell put. You can go out until, you can go out to January, you can go out to March. Basically what I'm saying is I want to buy shares of Oatly and I want to get paid for it. And as you can see here, 25 bucks is amazing. This is a 12.5% return in about 5 months, right? This is only 200 bucks. You only had to put up 175 because, you know, after you factor in the premium, it's 175. A couple $100, you can make $25 here, you know, selling options. And this is an out of the money option. Oatly's probably not even going to go to $2. It could, but it's probably not even going to do that. So anyway, selling puts on these 3 penny stocks is exactly what I'm going to be doing as the market opens up, which is my cue that I have to wrap this up, start trading, and show my community how I'm going to make some money. So if you want to sign up, the link in the description. And as always, thank you so much for watching the video.